Hello and welcome to Trading the Trend. The question we get to ask right now is what trends are you riding? I'd like to also say it a little different way. How much has it costed you in not being comfortable in identifying trends, what a trend is, and how to try to invest in that? Today, that's going to be our focus here as we talk about past examples and new examples. Now, if you really let that sink in, that's a pretty serious comment that I made there is that how much has it costed all of us? Now, I went to school for German and finance, and no one explained to me what a trend was. And so if you're like me, you're probably saying, I'm glad we have this class. I feel the same as you do. Now, just real quick as we get started with us, we got Rachel Dasher with us in the chat. Say hello, Rachel. Just real quick, as we get started here, we'd like to welcome Jim, Speak the Truth, Pia, Surges, JP, and many others. Welcome to all. Now, I got some questions in the chat, so I want to try to get to those as quickly as possible. Remember, you can follow Rachel or myself or any of us coaches on X. We do post educational content daily and throughout the day, occasion on the weekend, and so on. Also, real quick as we get started, I want to give us a quick reminder that most of us, it's kind of funny. Myself, I don't even watch TV. Everything I do is through YouTube. If you're the same, welcome. Our page, which we actually broadcast out from, is YouTube. And our channel is called Trader Talk Schwab Coaching Webcast. So this is live, but also recorded as well. So if you're watching and recording, welcome. And don't forget to subscribe. You can subscribe for free. Now, first off, let me send this out to you. And also now what you're going to see is if I go to this, you can also see the playlist. Now, I have certain things that I actually watch on YouTube all throughout the day as I'm kind of watching markets. And I subscribe to their stuff, and I like to actually see their playlist because it's really good content. Same idea with this class. And so this right here is going to be the playlist for our class. Last week we talked about learning to become more comfortable with trading trend. Okay, that's what we talked about. And then we talked about stocks and options in trading trends, missing out on trends, being emotional. Now, you might know someone that's like that, not us. And no routine. Oh my gosh, that hits a main nerve. Okay, so if you said I haven't watched those actually episodes, go back and watch those. Now, also as we get started here, quick reminder, our examples are going to be stocks and options. As we talk about stocks, you might be familiar with that. Great. Okay. We'll talk about shorter term, intermediate type trading, but for sure, also probably more of a focal point of it is intermediate, 2 to 3 days to 2 to 3 weeks. That will probably be a focal point. It's not saying that we can't look at longer term, 2 or 3 months plus, but the goal is to really ride a trend that might go 2 or 3 weeks to 2 or 3 months at a minimum. Okay. And also remember that when we talk about options, if we do options carry a high level of risk, not suitable for all investors. When we talk about examples, we will do those in the Paper Money software application. And also when we talk about investing involves risks, including loss of principal. Now, when we also talk about, let's say, short selling, let's say cash secured puts, remember that is a standing obligation, and those are American style options that we'll talk about. Those can be assigned at any time, whether they're in the money or not. And also, as we talk about our examples, we'll break down the agenda in this way. First, I want to talk about past examples, stock trades. Then what we're going to do is we'll look at index and sectors. Then we're going to talk about some new examples, stocks and options. So first off, let's go take a quick look at the Paper Money account. Now, the nice thing about coming to this class is we do examples in the class together. And sometimes we have some really nice trades. Some other trades were like, hey, someone else must have done that because it didn't turn out the way we thought. I'm joking. Sometimes we have bad trades. Now, example given I have right here. We're in the Paper Money account. We're in the margin account. Let's say hypothetically, close that off on the left-hand side. And I just want to kind of take a look at some of these positions and see, as Bill would say, if we need to administer to any of the positions. Well, so first off, you have Delta, shares of stock, Goldman Sachs, Intel, and Monster. Quickly, let's look at these four and see if we need to do anything. Now, as I show you these, tell me if we need to do anything, okay? Now, what I'm going to do is I'm going to go to the charts. I'm going to pull up DAL. Now, if I pull up DAL, do you notice anything on the chart that we might need to do? Does anything stand out here? Now, you might be kind of asking yourself the question, well, how would I know if we need to do anything? Well, number one is we have a bracket order on the chart, right? We got a limit order on the top. We got a stop on the bottom. Now, first thing that probably most people kind of took away from this is, James, where the stop is way down here. That's true. If you go back, let's say today, 1 day, 2 day, 3 day, 4, 5, 6, 7, 8, 9, 10. If we said we're going to move our stop off a 10-day low, well, the stop would actually be underneath at 70, 79. Now, I know what you're thinking, okay? You're thinking, oh my gosh, that's a really low stop. That's not really going to change our opinion on what we're going to do on this position. Today, the target was $85. Now, let's kind of go back to our little sheet of paper just real quick, and let's just kind of run the numbers, okay? So we got to about 85. We got to about $85. Okay, well, excuse me. The target was $85. The high, okay? And by the way, I have to create a sheet every time, okay? You don't have to do that. You might have kind of sheet that you have all the time in the like your little sheet of paper. Feel free to do that. 83.76. That was the high. What was the remaining reward? Well, that remaining reward would just be the difference between 85 and, let's say, 83.76. So we were trying to make, let's say, $1.24 left. Now, where's the stop? Now, if we moved up the stop based upon the 10-day low, that stop, if we did this, let's go to that third chart in. That stop, we'll actually go to the fourth chart. And if we looked at where the stop is exactly, we moved it up, which we can move it up just a smidge, 76.74. Okay? So 76, excuse me. I was speaking German yesterday with someone in Salzburg, Austria. So forgive me, 67.74. I'm always going backwards. Stop doing that. Now, stop. So now if we actually look at, let's say, the reward to risk. Well, and by the way, we actually need to actually add that risk right there. What is that potential risk? And we say potential because the stop is not a guarantee to sell out at that price. Well, if we were at, let's say, the high price, 83.76, okay, and we drop down to the stop, that's going to be a risk of 1602. Now, I'm going to put this in a green color representing the remaining reward, okay? And the red color being the risk. Now, if you really think about it and say, wow, the remaining reward was $1.24, and we're trying to literally, the potential risk given where the stop is 1602. When you think about that in terms of, let's say, I think of it as in terms of a fraction, that's like a 1 to 8, 1 to 9. Remember what we said before, whenever that fraction is 1 to 4 or worse, okay? Now, when I say worse, what do you mean by that? 1 to 5, 1 to 6, and so on. $1 reward to $5 risk. $1 reward to $6 risk. That's when the investor says, look, we're crazy to set probably typical stop losses. So what might the investor do? Well, funny we should ask. Well, if we actually have, let's say, a reward of, let's say, $1.24, the investor might say, look, if I'm going to set a 1-to-1 stop, that would really be at the highest point. Now, read my lips. Highest point. Not where it is now. Not where it is now. What was the highest point? 83.76. If you want to do a tight stop, less that remaining reward, that tight stop would be 82.52. If you said, look, I'm going to give a little bit more room here, just a little bit, okay? If you said, I want a 1 to 1.5, give it a little bit more room, that's going to be about 186. And if you did that, a 1 to 1.5 stop, just trying to give it a little bit more room from the highest amount, and then less, let's say in this case, $1.86. And now these are now going to be the stops. A tight stop, 82.52, and then you actually have right here 81.90. Who taught you this? It was me. I got so sick of people like, there's times where it actually makes sense to kind of tighten down the hatches, if you will, okay? Now, what happens if all of a sudden you go up to 84.50? Well, the numbers adjust, okay? 50 cents. you could adjust the stop, and you can kind of see what that stop is right there. What if it goes to 84.75? Well, if it goes to 84.75, there it is right there. And you can see the remaining reward gets smaller and smaller. Okay. So if I go back to this, what is that stop going to be right now? 82.52. We're going to raise that up. And so what you're now going to notice is, well, James, we're below that now. Exactly. So what we're going to try to do is, hey, if we move up a stop to 82.52 and we're below that, and I say it ad nauseum, well, if you set a stop at 82.52 and the price is below that, it could fill at a lower price. Funny we should say that. Let's show what it looks like. Well, if I do that, send the order, well, it's going to sell, but it didn't sell at 82.52. Something's wrong with my platform. No, we don't understand the order type, okay? So now what we see is trade number one was Delta is sold. Now, if we are being routine-based and we saw that, that's what the investor was doing if they're using the stop methodology. Okay? Now, so trade number one, Delta, we target out of that trade. Now, by the way, if we looked at this, if you look at this right-hand side, now when you go one, everyone count it with me. I can't hear you. I can't hear. 1, 2, 3, 4, 5, 6. Your typical bull flag polls are probably 5 to 7 days. You can have 1 or 2 days in there where it's a red candle. Okay, but here we don't even have a red candle in this case. Is it probably likely that this could flag back? Sure, I'm going to right click on the chart. I'm going to create an alert. This is going to be on probably a daily watch list to say, look, if we get any pullback 1, 2 days, 3 days or so, that might be the entry on the dip in the price. Now, if you just forget about this, you just walked into the trap that the stock actually made a brand new high. You go, oh, I'm going to look at all these other things. No. Get back here. Okay? If you just made a high, the highest likelihood is make a higher low. And I'm telling you, how much money have you left on the table because you sold out of the stock? You thought you were King Kong. Now, I know we've all done this, okay? I'm just laughing at myself here. Yeah, I'm going to tell my friend. I'm going to tell Rachel about that one trade. Yeah, I killed it. Okay, that's what we all do, right? Yeah, that paper trade, we really worked that one over. And then we totally forget that the trade's not done, okay? So that's why we're going to set the alert right there. Now, is anyone else with me as I say that? You're like, can you just say, James, I've done that too? And hopefully you're laughing. Now, super quick, let's go to Goldman Sachs. So in the stock position, where'd the Delta one go? Well, it fell off because we don't have a position. Goldman Sachs, quickly, we might not need to do anything. Goldman Sachs, if we look at this now, where's the target here? Well, the target that we actually set was 1035. Let's run the numbers. So the target was actually 1035. What was the high? Well, I could see right on the chart, the high was 1016.54. The remaining reward was 1846. Now, what's the stop? Now, if I was just kind of looking at what is the white line? The white line is an 8-day low, and the red line is a 10-day low. Now, where's the stop now? We can visually see on the chart. I'm going to tell you right now, I can't stand it where people cannot go back and see where the entries were. I cannot stand it where when I ask someone, where would you have gotten out? And they can't show you on the chart. It's like, well, it depends. It depends. What depends what? Okay. I want to see it on the chart. I want to see it now. I want to see where it was before. How did it play out over time? Why do I say that? Well, the stop is here now. We're going to move that up. So it's not depends. It's not, well, let me see how I feel, because we're not trying to feel anything. Numb. Okay. So now when I actually come back and say, where's the stop? It's right around 923.77. We go right back to the math. And if we look at that 923.77, you're now going to see there's the risk. Now we've got to ask ourselves the question, what is that fraction? So when we look at the reward to risk, we've heard of things like, I want a $2 reward for every dollar worth of risk, 3 to 1, whatever. Well, we're not doing that math here. We're looking at this as far as an inverse, okay? meaning it's going to be 1 to 2, 1 to 3, 1 to 4, what, so on. So if I looked at that right there, divided by that right there, and I said, what's that fraction? Well, it's going to give us a percent. It's 0.19. And what is that fraction? It's a 1 to 5. 1 to 5 would be 20% or 0.2%. Okay. Now, if you look at this, what do we need to actually do? Well, if that remaining actually reward was 18, we can already see what the stop would be if we set a tight stop or if we did actually a looser stop. Now, let me ask you a question. Do you feel like if you did this 20 times, 30, 40, 50 times, do you feel like it could just be something that you could practice? Okay. Now, I want to kind of go back and just real quick, let me see if I can't change that. Right click on that. Format the cell. I'm not a nerd here, but let me get a fraction here. Yeah, there it is. Okay. So there you go. All right. Well, there you go. So we change it to a fraction. So we know that if it's 1 to 4 or worse, 1 to 5, 1 to 6, 1 to 7, 1 to 8, right? So what does that tell us? If that number is 1 to 4 or worse, we're coming down here and saying we're moving up the stops. Now, if we said, look, we want to set tight stops. Well, a tight stop in this case would be 998.08. All right, so let's go back. Could we actually adjust the order? Okay, 998.08. Okay, stop GTC. Now, remember how this works. If it goes to that price or less, sell it. Now, that doesn't mean that we just kind of like fly to Hawaii and then completely forget, okay? There's things like phones, okay? There's things, for example, like iPads that are no thicker than a sheet of paper where you could run this right on your little iPad. My wife calls my iPad the man's purse. I have no problem with that, okay? So the big actually thing is get used to using mobile. You do not have to sit at your computer all day and actually watch this, okay? There's reasons why there's mobile for a reason. So second trade we actually did there is moving up the stop on Goldman Sachs. Intel, okay? Last one, and we'll actually look at a new example. We'll say that the other one. If we go back and take a look at this and we need to move up the stop, well, we can see where the stop is. Notice actually on this one right here, the stop was right there. That's where we were at the highest point. We did not get stomped out on that. Came close, okay? We actually go forward there. And you're going to see that if you take a look at where it is, came close though, real close. If you look at that, you're going to see that the lines have not gone up. They've been to the same level, which means the lows over the last couple of days have not changed, okay? Now, if we can actually get this to burst to the upside, 1 day, 2 day, 3, 4, 5, 6, 7, 8, we're still, we need probably 2 to 3 days where the price goes up and makes it where the 8 or 10 day low is based off these lows, okay, not this low, okay? So what I mean by that is, let me draw this just to make sure we're all crystal clear on what I just said, okay? Let's say we have this candle right there, we have that candle right there, and we have that candle right there. So let's count them. 1 day, 2, 3, 4, 5, 6, 7, 8. Now, well, if we set a stop based on 8 day low, that line would be moved up to there being 112.81. So I said we really need 2 to 3 days where we don't make a new low, okay? We need time to go by to where that low now becomes the lowest point where we can move up the stop. The current stop on that is at 20, is on right about 103.70. If we could get another 2-3 days of Intel, this could be a big stop adjustment on Intel. And notice this is not based upon feeling. This is not based upon, here's what my viewpoint is, okay? It's just based upon using technicals, okay? Yeah, so, yeah, I mean, it's kind of stuck right now, but as we'll see in just a sec, there's still quite a bit of movement in semiconductors. Now, I'm going to hold off. So was that helpful? Monster Energy, we don't need to do anything yet. So I think we could just say there's nothing we need to do on that one right now. The one that I'm just going to make mention is, because we're right here, we just talked about Delta. So let's just close this. When I say close this, let's just finish this short put. So when we talk about the short put, well, that's a selling a put strategy, which is the obligation to buy the shares at the strike price from the time you put it on until expiration. You try to sell the premium for as high potentially as you can, maybe to a point. And the goal is to get the mark price after you sell it to decline, and you try to sell high and buy low. Well, we sold for $2.77. We're at 70 cents. The only way we get the next 70 cents, we got to wait the next 21 days and or have the stock go up quite a bit. Okay. Now, if some investors say, James, we're over, now just again, based upon the rule set that we talked about, okay? We talked about if we can get 50% in 10 days, in the first 10 trading days, the investor might consider exiting. Well, to answer that question is, when do we do the trade? Well, it was on the 21st. What date are we on now? It's May 28th. So go back to the rule set. In the first 10 trading days, well, we know we're inside that because it's been 7 calendar days. If we have 50%, consider exiting the position or rolling it. Second, if we have more than 20 days to expiration and the gain is more than 65%, the investor might consider exiting or rolling the position. Well, it meets both of those, okay? Now, what we're going to do is we're going to right click and say, spank you very much, as Hannah would say. Great closing order. We're going to buy it back. Now, if we just buy it back by itself, are we exiting the position or rolling the position? That's true. Yeah, we're talking about Delta as far as Delta Airlines, not Delta on the option Greeks. Correct. And let me just pull this up so we're just clear on which stock we're looking at. We're talking about the Delta Airlines short put position. Last one to spend the rest of the time on new positions. But you got to talk about past ones, okay? You got it. We talked about 3 stock trades, 1 option trade, okay? Now, if you take a look at this, we're going to move it to the mid price. You hope you get the mid. Doesn't mean it's going to fill there. We're now going to go confirm and send. And we're saying, look, we'll buy it back at 70 cents. We're trying to make the difference. You sold it for actually $2.77. We're trying to buy it back at 70 cents. We're trying to make that difference, $207, less the commission. Send the order. There it is. Okay. Any questions? Now, there was a comment. Bill actually makes a comment. The XOM moving legal home from New Jersey to Texas, TXSE, the Texas Stock Exchange, growing. You know, that regulation is some serious red tape, okay? Anyway, that's been in the news, okay? But it's just kind of interesting. Yeah, I mean, it looks like businesses want to kind of maybe try to go to an area where there's less regulation. What a surprise, okay? It's kind of funny it's a surprise. Now, let's go back to this. There was a question on Monster. Is there adjustment that needs to be made? Well, first thing, I mean, this one's going to be quick here, okay? We're not even close to the target yet, so we don't need to talk about reward to risk. We look at where the stop is, and we actually take a look at this position and say, where could the stop be if we're moving it off an 8-day low or 10-day low? We can move it up a little bit. Where is the stop? The stop is at 83.79. Move it up, and that stop is going to be about right there, 85.47. Now, if we move the stop up, sell it if we get to that price or less, send the order. Now, when you look at the price pattern, we really actually have this prior high. We actually have this point right there, and you kind of see that it's in the cup formation. And so now what you're going to notice is we've actually had a high there, or equal high. We had a high right there. This right there, that was a bounce spot. That's a higher low from the resistance. Old resistance becoming new potential support, okay? And so we had a bounce spot. Now, can we actually get some movement here? Okay. All right. Now, let's actually kind of go back to this just real quick. Let's clear all drawings. So I answered the question on Monster. Any other questions? Okay. Now, I'm going to watch those just real quick. I don't have KO yet, but if we do, we'll come to that. Now, what I want to do just real quick is let's kind of, so the chart that we were working off is, let me first off share this grid with you. So this grid right here is very important if we're talking about trading the trend. That right there, okay, is what I just sent to you in the chat. Let me show you how to put it on. Go to Setup, Open Shared Item. Now, set up Open Shared Item, copy and paste. That's not too bad, right? Let me do that again. Setup, Open Shared Item, right there. Now, put it right there, preview that. Okay, once you preview it, the only thing we could really do is say import. Once we actually do import, it's going to become a couple small, it's going to give us a small chart. Now, what you're now going to notice is you're going to see that there's a hook arrow, which goes back to the all the charts. You're going to see that there's a couple boxes. And if we kind of maximize that right there, you're now going to see that we can just hit the back arrow, back arrow, back arrow. It's taking us to different charts, each chart being a different tool, like a hammer, a crescent wrench, flathead screwdriver, a Phillips head, and so on and so on. There's reasons to use and separate the charts, okay? Now, if we click on that right there where there's multiple, click on that. Just go down to where it says Save Grid As, and now all of a sudden, we just call it the package 2026. And so that way, as you go through the charts, you're going to see that you can just, it saves it. You don't have to do it again. Super quick. If someone said, well, just quickly tell me what is the purpose of actually using different charts. I'm going to kind of fast fire this. Let me bring up the NASDAQ here as we go into our second agenda item. We talk about indexes and sectors. And then third, we're going to talk about some new examples. This chart right here just does a great job as far as seeing momentum and trend. The 10-day exponential being momentum, the 20-period moving average being trend. The advantage of the whole moving averages, you get the color coding of the moving averages and the shading. There's an advantage, okay? Now, if we take versus standard moving averages. So this second chart is looking at breakouts, okay? You see the three dots there, the 10-day high, the 20-day high, the 55. The second chart is for breakouts. The third chart is looking at breakouts and stops, okay? Second chart was breakouts. The third chart is breakouts, but it also has the stops on it. So if you like to go back and back test breakouts over time, you could see that over time. Fourth chart is going to be stops only. That was really what we were looking at before. The fifth chart is really looking at, let's say, the trend candlesticks that we talk about. Okay. Gosh, that's a lot of green. Sorry. Okay. It's a lot of green. I know. Probably need some sunglasses on there. Could you? Oh, okay. Now, third chart in, fifth chart. Let's see. Let's go back. What chart? First, second, third, fourth, fifth. Fifth chart was trend. That's on the 1-year daily. Sixth chart is the 3-year weekly chart of the NASDAQ. Seventh chart is looking at moving average envelopes. The purpose of this chart is to really gauge, is it too high? Is the timing, how good is the timing? Want to go back to chart 5 and 6 just real quick? Chart 5 is kind of your standard 1-year daily chart, okay? It uses different moving averages to create the trend color candles, okay? There's purposes of that. We're trying to see what type of trend are we currently in. That is not based upon what my thoughts are. It's based upon where the stock is in relationship to moving averages. Most technicians can't tell you this. It'd be completely dependent upon how they feel for the day and what is in the portfolio, which they don't tell you that. Okay? So that's not what this is. If we have a green colored candle, it means the price is above both moving averages, irregardless of what's in the portfolio, and the price is not at resistance. It is so refreshing when you get away from thoughts and feelings and what do you think? Okay? Now, seventh, the weekly chart of this is to help us see those intermediate to longer term trends, but the same idea as the previous chart. The moving average exponentials, moving average envelope, and the last chart is really a great gauge as far as actually seeing this is really the first chart up top with the whole moving averages, but also helps us to kind of see volatility on the price expressed as far as ATR, which is a dollar amount, ATR percentage, okay, which we're a big fan of percentage, and the implied volatility. So you can think about the ATR expressed in a dollar amount or a percentage amount, stock volatility, and the implied volatility. Well, now we're talking about options here. So it kind of gives us trend, price volatility, and option volatility. Okay. Yeah. Now, the quick question here. Now, let's kind of talk about. So, first off, was that helpful to kind of just go through these charts? Like, what's the purpose? And my gosh, if I could go back to 1996 and someone said, "Hey, happy stinking birthday to you. Let me just not have you waste 20, 30 years and coming up with some charts that are kind of interesting. And let me just drop onto your plate some of these charts right here and tell you how to work them." Oh my gosh. Okay. It would have been helpful. Okay. Answering my own question. now, just real quick, someone actually said, James, how do I just, how do I put them on real quick? So let me do this just real quick. Go to setup, open shared item. Click on that right there. Okay. Now, once I do that, copy and paste in what I sent to you. Now, what you're going to see in this case, if we go preview, okay. So the thing is, you got to copy and paste in what I have and then just do preview. Okay. Once you do preview, now what? Well, click on where it says import. Okay. When you import that, it's going to bring up the charts. And that's where we're going to maximize. Okay. So here it is. This will come up with a small chart. Let's maximize it. How do you save it? Okay. Well, let's maximize it first. How do you save it? We're going to go up to the very top right, and I'll hold for just a second. Click on those boxes right there. Click on that. Go down to Save Grid As, and it saves it. If we save it, you're now going to see that when I click on that right there, the package 2026 is right there. So you save it by clicking on those boxes. All right. Now, let's actually kind of go back to this. We got about 12 minutes, but we're going to do some damage. Okay. Now, first off, when we look at, let's say, the charts, let's pull up this. Let's pull up this right here. So when we take a look at, let's say, the NASDAQ, brand new high here today. And I know some of us hate that. Maybe not. Okay. Brand new high as far as NASDAQ. When you look at the semiconductors, which, kind of a big part of that, you're seeing that that's trying to push back after yesterday pulling back some. A pullback day doesn't necessarily mean a bearish trend. You pull back, let's say you look at the SPX, the S&P 500, which we've been saying for days now. The SPX, it's not just technology. You look at the SPX EW, the equal weighted, okay, and you see that also doink hit a brand new high here today. Okay, now the VIX. Okay, we can play taps as the VIX sinking like a downward trending price chart, okay, going flushing lower. Okay, now a lot of people like seeing this chart go down because the lower this actually goes down, the volatility in the market smooths out, and you can kind of get these trends to just go up. And it just blows people mind. Why does it keep going up? Because there's no waves in the market, or very little. Okay, and some people get so mad. Okay, now if you look at the Russell, the small caps, doink, brand new high, and the Dow Jones, not a brand new high, but if we talk about the highest closing level, well, if we close here slightly more, this is the highest close we've actually seen on the Dow. So everyone's getting a little push. The only one that's not happy is the people that are doing bearish trends, which are going against the trend. Okay, those are the people that are unhappy. Now, super quick, technology, brand new high. Healthcare, keep an eye on that. Now, remember, someone does not have to buy individual stock names. They might just buy the sector. They might buy an industry group. Don't forget that. Okay? Now, tomorrow morning, we have the ETF class at 9:30 a.m. Eastern. I am inviting you. I want you to be there.
If you're busy, call and tell them you're not going to be there because you need to be on the ETF class tomorrow. You need to actually commit to that and say, hey, I'm going to watch that because it's not recorded. So if you can move whatever you got, move it. Okay. Now, the excess. So second thing to bring up, some people might just buy the healthcare, the sector in general. The basic material that is also trying to get a little push here. Okay. When you look at, let's say, industrials, trying to get a push. Now, you're going to notice that when you look at industrials, kind of up near an area of resistance, okay? Not breaking out yet, but a long tail here today. Discretionaries, if you look at that, the sector, that actually cut. Now, you could say hanging man if you think we're up at resistance or if we're bouncing off that 10-period moving average. Hallelujah! Okay? That's kind of what it feels like when that chart is bouncing off that moving average. It feels like a little hallelujah, okay? And if you take, oh man, I should never tell you that, but anyway, that just came out. And it's recorded. Okay, there it goes. Now, you're going to take a look at this. That kind of looks like a flag. So if you kind of take a look at, let's say, what is in discretionaries, what is driving that, okay, well, number one, the investor might consider just buying the sector. Second actually thing is what stocks are, for example, driving that. Now, here's the thing. It's not like real estate's falling apart either, okay? And I do want to talk about an example on that in just a moment. When we look at the transport average, which has been something we've talked about quite a bit, whether we talk about airlines or cruise ships, you could also actually kind of loop into here, like even hotels as well, all kind of part of travel, etc. Transportation right there. Let's kind of start with just real quick SPG for just a second. Now, not everyone likes to trade options, okay? Let's say the investor said, hey, James, I'm looking to do a trade, and we've got about 8 minutes, and let's look and see if we can't put 2 or 3 trades down. Now, if we take a look at this, I'm going to kind of just bring back up our little sheet of paper here, okay? Now, I kind of like to kind of see things that you could just do over and over and over. So if we look at this, say, hey, what's the current stock price, okay? Well, that current stock price right now is sitting here about 207.22, okay? Support. If we said, where do we see support? I mean, if we're talking about horizontal support, I mean, it's probably right around, let's say, 200 flat. Stop 196, okay? Now, that's taking the support less 2 to 3%. That's at 196. Dollar amount risk, 1122. Now, remember, again, when we say that, you're making a forecast. Forecast being that it gets hit out right at 196. We're going to kind of put a little box on that because that's kind of a risk there. That might not completely be true. I'm going to put it in gray for a reason. We don't know what the fill is going to be. The percent, if we actually lose the 1122 of the 207, it's 5.41%. ATR, what's that, the ATR? And it's at the bottom there, 3.47. What do we got? Well, that dollar risk, 347. The ATR, well, excuse me, dollar risk, 1122. ATR, 347. The multiple is actually 3.2. Trying to give a minimum of about 2 to allow for some price fluctuation. Now, if we did this, does every trade have to have a stop? Not necessarily. We're going to right-click on the chart, buy custom with stop. Now, what I'm going to do on this is I'm going to go back to the paper money account, SPG, right-click on the chart, right-click, buy custom with stop. And if we did that, you're now going to see that we're just going to punch in the numbers here. So we're kind of using this as a little sheet of paper. That way I'm talking, but you're seeing, okay? Like, what's the current price? What's this? Look, it's not advanced, okay? I'm just putting it on so you can follow the conversation. What's the stop? Okay, there. Now, you got 196. Now, let's double check that. It just seems weird. Okay, okay, it is. Okay, 196. Okay, just want to double check. Data GTC. Now, again, if we actually said how much capital could we put in at the most, we're at 49,800. If we actually did 4980, well, that would be 10% of the capital. We cannot do any more than 24 shares. Stop day GTC. Okay. Now, the question came in before, Now, Bob actually says, how do we get that spreadsheet? Well, there's not really a spreadsheet. Okay. It's, I mean, this is a recording. You can just go on a sheet of paper and just write this in. Okay. Type it in the box. That's all it is. And there's nothing magical, I mean, about this at all. It's just these are the numbers we want to know about before we consider doing a stock trade. Okay. So and we're just trying to write it down so we could actually bring it all together. Now, we're going to go confirm and send. There it is right there. Okay. Remember how the stop works. If it goes at that price or less, sell the shares. Send it. Okay. Now, there is also, for example, in the chat, a survey. Click on that link. Now, when you click on that link, it's going to give us 2 whopping questions. This is very important for me. It would hurt my feelings. I take things personally. I'll be honest. Now, here it is. Gives 2 questions. Okay. Click on that. Hold it right there. Please fill that out. I love to read your comments. It's the first thing I do in the morning first thing I look at the market. Second thing I look at the comments. Okay. Just being honest. But the biggest thing is there. That way, if you say, hey, what are some other things that you would like to cover in the webcast? This is what I read. Okay. I want to actually see what comments you have so I know what we can discuss so it's the most helpful for you. I don't want to waste my own air. I already know this stuff. I'm trying to help you. So if you don't fill it out, it's just hard to help you because you're not telling me what you need help with. Okay. And I want to help you. I'm just, okay, there it is. Okay. Now, here's the deal. Let's go to actually a couple of things. So when we talk about some of these, the question was asked about, let's say, when you look at Micron, stocks like Micron, is it too late to sell a put? Well, when you look at that second to last, yeah, the example of Micron is a little elevated. That would not be our first example of what we would look at in terms of like a setup today, based upon that we're above all the levels. Okay. Now, that does not mean that there's not other stocks in the same industry group that might be a little bit more in line. Example given, I'm just going to look at a couple of them. Okay. A stock like AMAT. AMAT's right at the 3% line. The light blue line is 10% exponential moving average. The yellow is 3% above that. The red is actually 5% above. White is 7, and that gray is 10. So, I mean, by the way, you might be thinking, well, where do you find these? Easy. Go to MarketWatch, visualize, pull up the NASDAQ itself, and you're going to see the stocks that are going to be in the information section. If you said, but I really want to see the SP 500, that's probably easier to see the chunk of them. Those are the stocks that are going to be in the semiconductor space right there. Now, do not forget stocks like SanDisk, Seagate Technologies, WDC, and this one right here. I'm going to start crying. It's so painful. Okay, no, it's not. Okay, Dell. Okay. Oh, I can't look. Okay, another brand new high. Now, I know that's not surprising because we've talked about that. But it was kind of interesting in the last couple of days. Doink, pops to the upside. Now, again, here's the thing. Dell has popped to the upside. If you're not a Dell person, well, Apple's gone up too. Okay, so that's the answer I would give actually on Micron. I would actually go look at, let's say, investors would probably go look at other stocks in the same industry group and then gauge where the stock is in relationship to the envelopes. Okay. So what we tried to do is show past examples. We also tried to show, let's say, kind of a new example and also how to really be able to look at some of the charts, but kind of show a systematic process of evaluation and running some of the math in terms of new positions and current. Now, remember, coming up next, we have Short Verticals with Brett Crowther. Thanks to Rachel Dashel for answering those questions in chat. And thank you for filling out that survey. Now, remember, with what we talked about here today, it was done for educational, informational purposes only. Tomorrow morning, I'll come back on with Kevin and do the class on ETFs. Join us live. This has been the class on Trading the Trends. And the questions you should always ask yourself is, what trends are you riding? And with that said, stay tuned for our next webcast coming up next. Don't forget to give the big thumbs up. Bye-bye.